I'm Jim Czek. You're watching Now Media. With me, Joseph Barbuto from Economic Longwave. And Canada about to enter an economic winter. That's kind of what you've been talking about when we were just before we went live here. What does that mean for Canada?
Sure. The economic long wave theory is sort of similar to the fourth turning. And there's four seasons in this economic theory that was discovered by a Russian Marxist economist called Nikolai Kondratyev. And over the years, we saw these patterns: spring, summer, fall, winter. We're still in the stage of what we call as economic fall. An economic fall is when the economy shifts and becomes financialized, where the prior two seasons from 46 to 81 was a period of innovation, real economic growth, real wage growth, and an economic boom humanity's never seen before. That changed in the 80s, and we started financializing the economy. And of course, everybody knows, or maybe is not aware, that led to the massive real estate bubble, which peaked in 2022. Now, the season that we switch over to economic winter is similar to what Japan went through from 90 to 2021. And that is deleveraging, de-risking, risk averse, asset values collapse, and a shift toward eventually economic spring, which is to the real economy. So that's the good news. During this period of economic winter, there's a massive amount of creative destruction, from politics to economics to innovation to societal direction. And one of them, of course, includes the monetary base or the present monetary system. Because this fiat monetary system, which has elongated the long wave, and people dismissed it doesn't work, we just elongated, but we just went into more debt. We're just consuming from the future. So economic winter is a period of massive deleveraging, asset prices repricing dramatically lower, political upheaval, and a restructuring toward a new economy. And that will take a generation to complete.
Yeah, because the economic winter for Japan was a long one, for sure. They've been stagnant for quite some time, right? From their big asset bubble, the property values and that, and the yen obviously fell as well.
Yes, and one of the things that was surprising, I thought in 2017 this bubble was over, but I don't have it present. But one of the aspects is private debt bubbles. And these cycles turning down together always lead to a hard landing. Schumpeter talked about the 1930s, where the long wave, the construction, which is the real estate cycle, and the business cycle turning down, that gave it the most severe downturns in history. And then, of course, it turned back up in the 30s. But that's where Canada's headed into, right? The long wave has been turning down since 81. Real estate, the demographic cycle was going to peak between 2022 and 2024, and the business cycle rolling over. So the theory is this downturn will be a very severe downturn, and proof is the private debt. Our private debt bubble in Canada is larger than Japan was in 1990, larger than the US in 29, and larger than the US in 2027. And that was just a zero inflation 2020 leverage peak that we got, which caught all of us by surprise how much it just was extended.
Yeah, basically.
Sorry.
For Japan, it was like 30 years of in their Nikkei stock exchange was basically from 1990 to about 2020. It's starting to see some growth now, but it was basically dead money for 30 years.
Yeah, what's interesting about Japan, it's proved a point that I get into discussions all the time, that population growth has nothing to do with real estate prices. I found the data this year. When you look at Canada's real home prices from 1899 up until 1950, where Canada experienced the most amazing economic growth. Real home prices were cheaper in 1950 and 60 than they were in 1900. Japan's population, interesting enough, for the past decade has been shrinking, but real home prices are rising. And the common denominator is affordability. This is what drives real estate. And what happened in Canada, the income started to stagnate in real terms, but we allowed the leverage to continue. And most people don't look at how big their mortgage is. They look at their cash flow, right? How much they can afford.
Payments.
And in 2022, it was zero, right?
Mm-hmm. Same way people buy cars. They don't really buy the price of the car. They buy the payment, right? They're just like, that's the car I can afford. And they work off payments. How is it though, like if we take a look at the United States, which seems to be with technology and innovation there, they seem to be, the stock market's, beating all-time highs. And Canada and the US was very connected till about 10 years ago when we started to diverge from them. We used to be ahead of them for like wages and all kinds of things in a lot of those factors. And now we've kind of, we've seen negative growth here in the last quarter and stuff like that. So how was that all politics that kind of leads to that, or what was that divergence?
Oh, I think it's politics, and two, the real estate bubble continued. When this thing burst, and the small amount of bears warned about this real estate cycle, one thing was interesting. I wasn't aware of how many Canadians were ignorant of this massive bubble when it unwinds, because in 2008, as you're well aware, Canada just kept going. We had a brief 9-month pullback, and it kept going while the United States and Europe went through a massive correction between 2007 2012. So we just kept going higher, and then we got, of course, these blow-off multiples in 2022, which is unheard of in history.
Like a penny stock, almost like a blow-off top, right? You're just like, it's just crazy, right?
Yeah, exactly. I mean, I thought 2017 was the top. Now, in real terms, if you look at it now, we've actually fallen below 2017. If you look at the BIS real home numbers, now prices the last quarter ending in June 2025, they've fallen below 2017. So I was right. I was definitely early. But the long wave is really contextual in terms of we've got a satellite view, and we have this Category 5 hurricane headed our way financially, but we can't tell you exactly the date, right? This thing was elongated. In terms of economic fall, it only was 10 years long in the 1920s. It lasted from 1920 to 1930. We had this 40-year run of financialization, falling interest rates, and leverage upon leverage. And in Elliott wave terms, that 2022 is a complete blow-off top. So, and now we're having the reversal of interest rates. So
how do we compare to the United States? If you say we're kind of heading into an economic winter, where are the Americans at this point then in this economic long wave?
First thing is their private debt levels are much lower, but the public debt levels are higher. But that was because of the bailout of their economy during the mid-teens, 2010s. But I think you're aware of this. As of today or last month, they have the most expensive real estate market in U.S. history and the most expensive stock market in history. Now, just as a warning, my first mentor was Peter Kundal, a great value manager, and he used to always articulate valuations are a measure of risk, not timing. And I learned this lesson in 98 and 2000, where I went bearish in 98, but the markets went up higher, even higher in 2000. And eventually I was right, but I always remember that it doesn't mean the markets can't go higher. Eventually, these valuations, where the U.S. is much stronger is innovation and productivity, productivity per GDP. And that's, in my view, a better measurement of what real wealth. we've, as you know, as you're aware, we've gone sideways for 10 years. And I think that's really because so much capital was going into real estate, speculation.
Decoupled for sure. And they do have the big benefit of being able to export their inflation because of the US dollar reserve currency, right? We don't have that, we don't have that, ability. Nobody's buying Canadian dollars as reserve currency like they buy the Americans' dollar. And, like they can shoulder a lot more debt because it's in the best interest of a lot of the countries in the world to make sure that dollar doesn't collapse.
Well, I've said that Canada could have a miraculous recovery in the next long wave upward, which is decentralized. We have the resources, we have the people, we have the technology, but we don't have the proper politics.
Yeah, policy is our biggest problem, right? Policy, yeah.
Yes, yes. And that assures a collapse, and I forecast that this is probably the end of the Liberal regime. I mean, they are not working in the best interest of Canadians for a lot of reasons. There's too much to cover, but
I just did a thing on Chat GPT just a while ago, and I just asked it because I don't know if you've seen Jason Jacques, the interim PBO, saying that Canada's budget is alarming, stupefying, shocking, unsustainable, and it's going to probably come in double the deficit, double what Trudeau put forward, which was which we thought at that time was crazy. And then if you compare some of the policies around our energy, similar to Venezuela, there's a lot of boxes that are ticked. Not to say that we're going to end up being Venezuela, but there's a lot of boxes that are ticked that are very similar. There's a lot more socialism, like ignoring their biggest asset, then getting into a fight with the Americans. All those things are very similar. And our currency is a lot more susceptible to a downward pressure than the American currency.
Well, one of the things, one aspect, let me tell you, and I actually posted on Twitter today addressing this, and this is what my concern is. These cycles, in the 30s, it became centralized, where the governments, we brought in a central bank, and the government stepped in, Keynesian economics, right? In simplicity, Keynesian economics, governments will spend in downturns while the private sector deleverages or contracts, and then the opposite happens, and they're supposed to pay down debt during the good times, right? So to defend Keynes, that was his philosophy. Well, governments just kept spending. Here's my concern. We have the convergence of three cycles turning down. And these cycles historically mean a severe hard landing for the country involved. Normally, we have the monetary bullets in terms of lowering interest rates to soften the blow. I can speak from an experience. The first asset bubble, I bought at the peak. That's how I got involved in the long wave in 1989 Toronto. And interest rates fell dramatically, and the fall in interest rates helped me from going into bankruptcy because my mortgage was at a very high level. Well, we leveraged from the zero bound. So where is the cushion? We can't go below zero. How do we cushion the mortgage brokers? I mean, the mortgagees of owners of real estate. The second aspect, we usually had governments running surpluses so they can offset the decline. And obviously, we're going to have a real estate bubble, which will lead to a banking crisis. We're not there yet, which will lead to a fiscal crisis, which will lead to a currency crisis. That's going to unfold over the next 2 to 10 years, maybe even shorter, 2 to 7 years. But that's what I see unfolding. My concern is, where's the fiscal room to bail out the economy when we're at the upper ends of historically of high. Now, Japan's gone much higher, but the problem is that we're in an environment that could cause interest rates to rise. Now, I want to say one more thing quickly. Most Canadians aren't aware of what happened to Greece in 2012. The audience should be aware of that. Most mortgages are tied to the 5-year yield. And in 2008, Greece and Canada's yields were about the same. 5-year yield, I think it was about 4% or so. Don't quote me exactly, but around that range. And then as the crisis unfolded, the 5-year yield went from 4% or so to 63%. That was their fiscal crisis. Now, I'm not suggesting that Canadian interest rates will skyrocket that high, but what if they just go to 10% or 12%? Because bond investors, when the fiscal crisis occurs, will be demanding higher rates. What does that do to real estate? So that's what my concern is. We don't have the fiscal room, and we haven't even had the banking crisis or financial crisis. All of us that studied history know that's coming. It's not here yet, as banking stocks are still at a new high.
So we got about 11 minutes tops here. How do Canadians protect themselves if they say, okay, I'm buying into what you're saying, that this is where it's headed? How do Canadians protect themselves in what is coming, like an economic winter? Just like, when you're getting ready for winter, you would stockpile, in the days you would stockpile some wood, you would stockpile some food, and you would make sure you had enough blankets and all that stuff. What should Canadians do right now to get ready for winter?
Yeah, I think probably.
Whoops. Did we lose him, or? We're just going to see if he comes back here. We're going to, maybe if he's frozen, you might want to, he's out. He kicked himself out, or you kicked him out? See what happens here. So how do you get ready for winter? I guess that's the question. How do you prepare yourself for winter? I have some thoughts on it as well, but we're going to let Joseph, if he comes back, talk about... There he is. You froze just when you're about to tell us how to survive winter.
Okay. First, deleverage before the economy forces you to. And that we're already seeing many people from Toronto and Vancouver being forced to deleverage, especially if you own overvalued investment properties and real estate. I've told this to my nephews and good friends. I've been saying this for years. Number two, you want to protect the value of your assets. If we're going into a fiscal crisis and currency crisis, obviously gold and Bitcoin have been going up for a long time. I was being a proponent of owning those. They're not tied to anything. If you own your home outright, and you're comfortable with the asset dropping 50%, I would hold on to it. Real assets is what survives all this, because there's going to be a monetary reset. So we don't know what they're going to confiscate. We don't know what they will make illegal. They can easily confiscate gold again, or even Bitcoin, or I don't know. This is one thing we don't know. But I'll be speaking at a conference and I'll be covering that. How do we protect ourselves? So the key is deleverage. Watch your cash flow. Japan had an English term called cash flow management during the 90s and 2000s. This is how corporations survived. They watched their cash flow. They didn't use debt to expand. They did the opposite. They used savings and revenue to continue their growth. And make sure that you're able to weather a downturn, because we don't know how bad. We know it's going to be bad, but how bad, we have no idea. And I think those are the core things. One other thing I used to tell my clients, don't be driving around and when the economy does turn down hard and be flashy. I'd be risk averse. There's going to be a small group of people, Canadians, that see what's coming and protect themselves, but bragging about it or flashing that you survived and done well, I'd keep it to yourself. Those in general, I used to tell my clients and people I consult with about what they can do in general.
One of the, a more cheeky way to do it if you're a bit more gambling is lock in, if you have some debt, lock it in at, like a rate that is, more palatable. Like say, if you get 4.5% right now, lock it in for 5 years. If currency collapses at any, interest rates go up, you basically inflate away your debt, because all of a sudden currency becomes less meaningful and you can just pay it off with, highly inflated dollars. Like if we look at Venezuela, obviously, what do they see? It's like 3,000%. I can't even remember the numbers. Are just astronomical what they saw in currency depreciation there, right? And do you think our currency is at risk? I know I've heard some economists talking about a 50-cent dollar. Could we see worse than that?
Well, I I would say that would be, it could be realistic, but the I'm on the other side regarding hyperinflation, and I'll just tell you my thesis why. I mean, people can agree or disagree, which is fine. The brother or sister of hyperinflation is skyrocketing interest rates. And since we're a credit based economy, not pure fiat, then the outcome, I believe, is going to be different. I believe it'll be deflationary. That's inevitable. In my view, from a long wave, it's deflationary. Because if we get hyperinflation, don't forget to take a look at interest rates. And skyrocketing interest rates will definitely bankrupt the real estate and governments within 6 months. All the tax revenues would go to service the debt. Nobody would qualify for a mortgage, and asset prices will collapse. So I think we're going to get inflation for other reasons until the economy turns down hard. But I believe that as the cycle turns down, they're going to bottom into the late 2020s. And the final bottom, because this asset bubble is so big, is probably in the 2030s. I think by 2040. But I'm in the camp that hyperinflation will be almost impossible. If it happens, I should say, I'll stick with that, almost impossible because of skyrocketing interest rates and what that would do to government finances and real estate.
So yeah, so asset diversification, like obviously gold is, it's a world currency. I mean, Canada is the only G7 nation to hold no gold reserves either, which is kind of odd, especially since we're such a resource-rich nation. It seems like a really bad policy. I think they sold the last of our gold in 2015, and I think Mark Carney was part of that government, Bank of Canada as well, and then advising. They said as an antiquated asset. And then a lot of countries kind of did the same thing, though, too, but they started rebuying gold around that time, though, right? I think it was, 2016, 2017, central banks started to accumulate gold, and now gold is obviously pressing, to record highs.
I think this is part of the cycle. What I love about the long wave, and I fell into it, was I was looking for a timing tool when I was an advisor managing capital. And then I realized I read everything. I'm not the inventor, I've just taken everything from portfolios design using the long wave, which there's a couple people that do this, to understanding the seasons, the cycles in history. Sort of kind of explains it's really a social cycle. And collectively, there's a madness of the crowd, so to speak, that say, hey, we don't need gold, and we don't need a currency that is controlled. We can keep spending because we got central banks, we can print, we can monetize, and we can keep the party going indefinitely. Well, one of the things I think most people missed was that debt is, and the debt we've accumulated is unproductive debt. It's not generating the GDP. We're generating GDP, but it's just, we're spinning our wheels where government and the fire sector is just extracting wealth from the real economy. It's not creating any wealth. And so we're starting to see those numbers. But the social mood is that gets overconfident and says, well, we don't need a gold standard.
Arrogance.
Arrogance, yeah, we all get arrogant. Listen, if I wasn't aware of this, I would have been buying real estate myself. I mean, think of up until 2022, anybody under 55 has only, as an adult, has only seen a rise in real estate market. So they take their current experience and extrapolate that. Those of us who study cycles, and I just fell into it because I was wondering what happened. Why did real estate fall in the early 90s? And during the 90s, real estate as an investment, you didn't hear anything. I remember we had a mutual fund boom and technology boom that finally peaked in 2000. But real estate, nobody was interested, and that was like a secular bottom, I think, in 2002. So there's a collective thinking, and this cycle is a recalibration of a fiat age where we're going to have some kind of currency. Some people believe it's gold. Some people believe it's central bank digital currency. Some are believing it's Bitcoin. But we're definitely going to some kind of currency because the public will demand it. And I think this is why I believe that we're starting to see governments want to keep in control, want to introduce a central bank digital currency, and gold and Bitcoin hit it, and now silver hitting new real highs and outperforming.
I'm running out of time, but I mean, I'd love to continue this discussion. I mean, if we could do this again next week or something, I think we could probably spend an hour at this because I think it's such an important topic, though, too. I think a lot of people do recognize that we're heading into an economic winter. And I guess, again, the thing is, what kind of jacket do I need to buy? What kind of wood should I get? Do you know what I mean? I think that is the preparation for this winter. Because, I mean, the only other alternatives to leave for sunnier places, and some people have left for sunnier, locations, and that's obvious. But if you're planning on staying, how do you get ready for an economic winter? And I think a lot of people would like to hear from you, because I think that's an important thing, right? Because a lot of people think, okay, I think they agree with you. This is happening, but now what?
Yeah, I'm going to be speaking at the Canadian Bitcoin conference in 2 weeks, and I've wondered what can I hand out to them. And it's a survival kit, and we can put this together. I'll send it to you, and just is to help as many people as possible. And the reason I want to make sure people understand this. Why am I doing this? I got wiped out in the 90s, and I was ignorant, and then I was managing capital, so it was okay. I'm never going to lose money again, and I never did, and neither for clients. So this information is so important. That's why I'm sending it to mutual funds, investment firms, banks, individuals, corporations. So a small group, because we can't reach everybody, can prepare and prosper. We'll come out of this, but it's going to be a difficult 1 or 2 decades. And I'll present the information. Sure, I'd love to do it.
Awesome. Thank you, Joseph. And again, welcome the information. And I'd love to have you back, too, because I think your message needs to be heard right now. And we do thank you for watching Now Media as well.
Yeah, thank you. I appreciate it. And,
we don't just report the news. We live here, too. We're your neighbors, bringing you stories that matter to all of us. No government funding, no outside influence. Kelowna Now, local, independent. News you can trust.